All right, guys. Thanks for coming tonight. Our guest is Ricky Beliveau. Did I say that right? Ricky Beliveau. He graduated college about 10 years ago and since then has become arguably one of the most prolific real estate developers and investors in the Northeast and certainly in Boston. So I'll hand over to you, Ricky. Great to see you. Thanks for coming tonight.
Yeah, thanks for having me, guys. Excited to be here. I recognize some of your guys' faces. Have definitely met you guys before, presented to you before. So, we'll keep this kind of just an open conversation, open dialogue. I can kind of give you a rundown of, my story. I don't know if I've been on so many podcasts and so many things over the years. I don't know if any of you have listened, but it'd be kind of the same spiel, how I got started, where I'm at today, kind of the progression to this point. And then I'd like to just open it up to questions. I think, if anybody, feel free to ask anything, whether it's as basic as, something you're looking at as, getting started, or it's as complicated as something that we're working on now. But, I started Northeastern in 2005, graduated in 2010. Didn't really have any plans of any type of real estate. I actually was thinking at one point I tried to get my real estate license and I ended up failing my class and never ended up getting my license. I still don't have it till this day. But my only thought before college, all I knew of was like my house, right? That's what it was like. Oh, before I went to college, was the house I lived in. That was what real estate was. And then got to college and it opened my eyes up to the most basic, which was rental, right? So my sophomore year, rented an apartment. I was like, oh, okay, this is another position of real estate, is being a tenant. And then as I progressed in college, I didn't think there'd be anything that would come of it until I took real estate finance my senior year. So when I took real estate finance, it kind of opened up my eyes to analyzing real estate transactions, the different sides of real estate. I did my paper senior year on multifamily investing on Mission Hill. You guys obviously all know Mission Hill. I did my paper on 3-family purchase on Mission Hill, and I realized like, there's a lot of money you can make here. At the time, it was in 2009, right? So this was right after the crisis, and where the financial crisis, no real estate was trading hands. Everything was sitting on the market. Boston, the market was completely flat, but rents actually had started climbing because the colleges were growing. More and more people were going to college just because there weren't jobs. And so I realized that the cap rates had really started to go up and that there was kind of a bubble opportunity in the rental space in Boston. So after graduating, I started working at Wellington Management. And that's kind of what I thought my career would be. I wanted to get into real estate investing, but I thought it would be as a secondary income, not my career. Was working at Wellington. I made my goal to buy my first rental property within 6 months. I talked to a lender and wanted to do an FHA owner occupant loan, and you need to have 6 months of W-2 income before you could get a loan. So my goal was I was like 6 months from when I start my job, I want to buy my first multi. I started work in May at Wellington, and I bought my first building in December. So December, I bought 3-family on Parker Hill Ave, still own it to this day. It was a 9-bed, 3-bath. Had 2 units with tenants. They were paying $2,000 a month per, for the bed, for each unit. And what I ended up doing was an FHA owner occupant. The second floor was my home, right? But it was really a construction site. So I renovated that unit, turned it from a 3-bed, 1-bath to a 4-bed, 2-bath by turning the dining room into another bedroom and turning the pantry into a bathroom. And then what I did that was creative is that I then went to the college kids that lived upstairs. And as a 21-year-old kid, I said, hey guys, you want to move downstairs into this brand new unit? Now it's a 4-bed, 2-bath, brand new, and you can pay $2,000 a month, same rent. And they were like, of course we'll move downstairs. So they moved downstairs. I went upstairs and I renovated unit 3. Then once unit 3 was done, I went to the first floor tenants. I said, hey, you guys want to move up to the 3rd floor? They moved up. So within about a 12-month period, I renovated the whole building from 9-bed, 3-bath to 12-bed, 6-bath, and was able to increase the rent. So I still own it to this day. When I bought it, they were renting for $2,000. Now they rent for $4,400 a unit. And so that was kind of my first jump into real estate. I was like, okay, well, I want to continue this. So a year later, I bought a 4-family on Mission Hill. Back then you were able to do multiple FHA loans. You can't anymore. You can only do one per person, like one per name. You have to refinance out. But I was able to take out a second FHA loan. I bought a 4-family for $825,000, off market, did some work in one of the units, and still own that one to this day. At that point, I bought in South Boston the next year. This was all while working still at Wellington full time. This is kind of when my first pivot occurred. So I was buying rental properties, but by this time it was 2013 and the market had started to really recover from 2008. And the prices were higher and there was a lot of buyers. And so what was happening is when I started to look at my next purchase, it was not as attractive, right? The returns were a lot lower. There was a lot of higher bids than me. And so at that point, I looked into the pivot into condo conversions. So decided that I would make a run at doing my first condo conversion project in 2014. I had wanted to buy in East Boston. I knew Eastie was going to come up. No one was really doing condo conversions then. Everyone was doing them in South Boston. There's condos going up. I said, why can't I do this in East Boston? I can buy the building for less. And I thought there was going to be a lot of demand. So I bought a property in East Boston, did a condo conversion on that and sold the 3 condos. And that was I was off to the races on my condo conversion, life cycle of my business. Probably spent 2 years buying 3 families, doing gut renovations and selling them as condos. Right towards the end of that, I got picked up Bigger Pockets. I was blogging. I don't know if any of you guys listen or read Bigger Pockets. I was blogging one of my projects on Bigger Pockets and they picked it up and they ended up asking me to be a guest. So I was guest 215. It was like, what was that? Yeah, it was back in 2015. So 4 or 5 years ago. And at that point, it kind of was made this whole real estate world really like an opportunity for me. All of a sudden I was being contacted by a lot of people. And it was a big jump for me. In around then is when I shifted away from doing condo conversions and I moved into, I still was doing them at the time, but then I learned about entitlements. So I started learning about how to do zoning approvals and how to take underutilized sites and get them approved for something bigger. We would start putting under agreement single family homes, going through the neighborhood process, which is actually just what I was doing tonight. A single family home, I'm proposing a 15-unit building in Dorchester. So we're still doing this to this day. And this is now our core business. So finding an underutilized site, putting it under agreement with contingencies and working to get it entitled. So back then we were doing 3 units, 6 units, 9 units is what we would propose on the sites. Over the years since 2016, our business has grown, and now we've got a lot. We have an 85 unit project we entitled last year that we're breaking ground on right now, which is rentals in Everett, 85 units, and we currently have 2 large projects that are in the entitlement process right now. We have Sky Everett, which is a 366 unit tower located near the casino. That will be about $200 million project. We have been working on that for about a year. We submitted it to the zoning board about 3 weeks ago. It got nationwide media attention. We were in the Globe. We had interviews kind of nationwide, Bloomberg. It was pretty awesome to see how LA Weekly picked it up. It was pretty cool having a widespread influence on that one. The other one that is kind of still no one really knows about, but you'll see it soon. I have an acre of land that's attached to the new Paw Sox Stadium, the Red Sox minor league baseball stadium in Worcester. And I've been working on that for about a year as well. It's directly attached to the outfield. And we are proposing, we'll be fully approved by next month for 320 units, looking directly into the baseball field. So you'll have concerts, a roof deck, and you'll literally be looking right at the field. Yeah, and so right now there's overall, we've got about just over 1,000 units in development in all different stages, whether under construction all the way through entitlements. We've got a management company. We manage about 500 units now, condos and rentals. We own about $60 million worth of real estate at the last count. We have a brokerage. So I don't have my real estate license, but I own a brokerage. I got about 25 agents that work for me. So kind of all aspects of real estate. But yeah, that's my journey over the past, I guess, 11 years, 10 years. So, I mean, obviously that's a lot. I don't want to spend too much time just spilling about me. I don't know if anybody has, questions or interest in any of those aspects or things you guys are working on, but I don't know, maybe we'll just let some questions come in.
Ricky, if you don't mind, I'm going to ask everyone to use the raise hand button because it just gets messy with people falling over each other. So if anyone has any questions, if you could just click raise hand, I'll call on you. First question, though, I'll ask, you've been in real estate for 11 years at this point. If someone's just starting out, what's the biggest advantage or opportunity they have that you didn't have 11 years ago? And what's the biggest challenge they're going to run into that they should be aware of that you might not have had?
So I think, the opportunities are still there, right? I mean, I think I definitely had a leg up coming out of a recession, right? And an economy that's been growing and growing and growing. And you guys are graduating when the Boston market has kind of been going up and up and up since I started. COVID really didn't have any impact. I mean, we haven't seen prices significantly drop. So I don't think you guys have, you're in a tough time when it comes to finding opportunities. I think one thing you guys currently have is the same thing that I had when I was getting started. Like, you have the power of FHA, right? You have the power of being a first-time buyer. What that allows you to do is do very small down payments. When I buy a building, I have to put down 25 to 35 to 40%, right? Because I have such a big balance sheet and I have so many assets. That's just the way it goes. You can't do low down payments. Whereas a first-time home buyer who wants to get into a multifamily, there's options out there for 3.5, 5, 7, 10, right? You have tons of options to buy multifamilies when you're getting started, when you're in the first 1 or 2, 3 units, first 1 or 2 buildings. And so I think that's something that I mentor so many, young people. We've probably had like 25 or 30 people that I've showed how to buy a multifamily using FHA. And, anybody who's, on this that wants an introduction, the guy who did my FHA loans has probably done them for 30 people in my network. He's extremely knowledgeable on the ins and outs of FHA. It's not as easy. Don't just go to a random lender and ask for it. They don't get it. Right? It's all about checking the boxes. And if they just go and fill out the paperwork, it's really hard to get the loan. You need a lender who understands what the requirements are. So before he hits submit, he knows it's going to get approved, because it's all about hitting certain milestones, right? What's in your bank account? How much are you making? How much reserves do you have? What are the current rents? What did it appraise for? If he knows that, he can make sure when he hits submit, it's going to get approved. Right? If any of those don't work, you're not going to get your loan. It can be as easy as getting one more paycheck into your bank account and not paying rent. That, like, delay rent and get one more paycheck and you get your loan, right? So those are the things that most lenders aren't going to tell you. But it's that in FHA, it's like you have to hit the requirements. So just be careful with that.
That's great. Thank you very much for that. Trevor has his hand up.
Yeah, so my question was, what did you do when you were at Wellington, and when did you decide to leave Wellington to pursue real estate as like your primary career?
Yeah, so I worked in trade operations at Wellington. So, back office, I worked directly with the equity and the fixed income desk. It was a cool job. I was a problem solver, right? Which is kind of what real estate is. Like, it's figuring out all different things. Like, I worked with the repo desk where, like, we'd have to figure out certain transactions. I worked with the equity desk, emerging market IPOs. So it was like, I'd literally get a call from a trader and he'd be like, I want to buy a local company in Egypt. figure it out. And like, and I'd have to figure out how to get the money and use the banks and buy Egyptian currency. And it was like, that was what I spent my days doing. So nothing to do with real estate, but it was in a lot of things you learn in corporate America, like professionalism, follow-up, you know, the problem solving in my job, all is something that I still use to this day. When I knew to make the jump, so a couple of things happened. So I was at Wellington and I was doing my CFA. I did my first 2 levels of my CFA and kept interviewing for jobs. Well, you gotta remember, so now I'm doing real estate development. I own multiple multifamilies. I'm doing condo conversions, making the first deal we did, we made 250 grand, right? And so we made 250,000, made 150,000, made 200,000. So and then I'm owning these rental properties and I'm being told in interviews that I don't have the experience to get that job that I'm going for, like to climb the ladder there. And I'm sitting at my desk and I'm like, all right, guys, like you're telling me I can't handle this job that's one level up from me when I'm working 50, 60 hours a week and I'm making hundreds of thousands outside of here. I think there's something wrong here. So I continue down the journey of getting, you know, maybe if I get my CFA, I'll get there. I finally did the project that got picked up by Bigger Pockets. I think I made like 500 grand or like $475,000 on that. And what happened there, it wasn't anything different. It wasn't like I got better at construction. It just, Eastie went like this, right? East Boston, I hit it where I bought a building, a huge building for like $600,000. And then I made 3 condos out of it. They were all big 3-bed units and the market spiked. I got this with huge roof decks on the building. And I ended up selling those condos for like between like all like around 600 plus per unit. And it was just perfect timing. And so at that point, I had a huge influx of capital. I got picked up by Bigger Pockets. So I was all of a sudden had some notoriety. People were reaching out. People wanted meetings. I had a track record, which is very important. And I was then able to, I had pivoted away from residential loans. So I was using commercial lenders at this point. So once you have a track record with a commercial lender, they don't care about W-2. They have no interest in your W-2. They care about the project and that you can deliver on what you're saying. So I realized that I no longer needed Wellington. And at that point, it was see you later. I think as someone getting started, I always say, and you always should try to get an asset or 2 while you have a full-time job. It's the easiest time to qualify for a loan, and it's going to make your real estate career so much easier to have 1 or 2 multifamilies. So stick it out on a W-2 before you make the jump into full-time real estate.
Thanks so much. Will?
Yeah, so 2 questions. First one being, when you said that you were thinking that East Boston was going to soar back in 2010, what were the telltale signs of that? And then the second question is, on your first deal in particular, when you were doing extensive renovations, how did you get the prior knowledge to know, you know, just how renovations work, and also more importantly, to cost budget it so that your property didn't end up going into the red zone?
So yeah, so East Boston knowledge is, you know, I was looking, and this is me sitting at my desk at Wellington, like hacking away at the computer, looking at the city and looking at Zillow and looking at everything. And I started to realize that there's a couple of things. One, it was so close to Boston. It was 1 stop from my office. And I was like, and then I always, this is one thing I still believe in, is like, if you look at the distance from the downtown area and you draw a circle and you look at all the multifamily pricing, and this is what we're doing right now. Like, I'm still doing this today. I look at where the multifamily pricing is, and you'll see there's huge spikes. It's like in Charlestown, a multifamily small one selling for like 1,500,000 for a small 3-family. You work your way around, and then you hit Eastie, and it was like, why is Charlestown selling for $1 million? Mission Hill selling for over $1 million, Southeast selling for over $1 million, and Eastie selling for 500,000. Like it didn't make sense. And so you're in this circle of where the city is and you're like, well, why? And you see, it just hasn't happened yet. There's the only explanation. It's got better transportation than Southie. It's got one of the best transportations in all of Boston. The Blue Line goes directly there. And then the other thing that I looked at, and I still do this to this day, is I follow the big developments, right? You can go on bostonplans.org. You can see what we're doing on our large projects all over the city. And it takes years to entitle a big project. You can look up when it's submitted and it shows a project happening. That's insider information that a lot of people don't look at. And if you know a big project is coming to an area, I can promise you it's going to drive up the values in that area, right? So by looking at that website, you can see where a 20, a 30, a 40, 100, a 200, a 300 unit project is coming, and use that. I can tell you, if you buy the 3-family that's 1 block away, the rents are going to go up and the value is going to go up. So just chase the big guys. In regards to on my first project, I mean, I'd like to say I knew what I was doing. I had no idea. I literally bought the building. I think I had like, what did I have? I think I had like 70 grand saved up and then left from my purchase savings. And so I dove into it. The first unit, so I had my uncle worked in, he owns a Back Bay Design Corporation. So they're a general contractor. So I did use him as a point of reference. So I asked him for help, took some of his guys at night to work with me, and started hiring people. But this is a definition of lesson learned. Like unit 1 cost me I think it was like $65,000 to renovate. Unit 2 cost me like 40. Or sorry, so unit 2 cost me 65. Then I went upstairs and I did it for like 40, like 37. I did the first floor for like 26. So like that's how much my knowledge I learned, right? So just in that amount of time, I cut my costs in half just because I got better about negotiating with the subs, the timing, the materials, and just learning. So that's just that's the definition of that shift is it's nothing changed more than I just got better at what I was doing.
Got it. Thank you.
Anyone else have any hands up? Yutsav.
Yeah. Hi, Rashad. My question is that not having a real estate license, did it create any restrictions for you in your career or sort of problems down the line?
No, I mean, honestly, I think a lot of times when you're getting started, there's 2 ways to look at it. Having your real estate license can complicate things because there's also, when you have a license, you actually there's certain things that you're supposed to do when you have your license that it's different than a guy like me can do. I'm just a homeowner. I can do whatever I want. I'm just another guy buying real estate. Once you get your license, you're held to a different standard. So that is something to consider. There's pros and cons. So by not having it, you don't have any restrictions that are put on you about disclosing things. None of that falls, as something you have to do as a homeowner. But if you were to get your license, I think it can open up doors. There's lots of money that I've missed out on over the years where I could have made money if I just had my license, right? Maybe it was, I could have represented a seller on a property that didn't work for me. I could have got the listing and I could have sold it. So I think there's definitely pros and cons to each.
Thanks. Trevor, again.
Yeah, so my question was kind of when you had invested in your first asset, you're pretty fresh out of college, and what was your network in terms of people you would know who could renovate the property? Well, I mean, obviously you were renovating it, but obviously being able to get all the people in the same room to undertake the project that you wanted to take, because you were out of college at that point. And I was wondering who, if any, did you know, or were you just surfing the web?
So yeah, like I said, so luckily I did have my uncle. So he owned a contracting company. So I really leveraged that. So I would take his guys at night. Literally, they'd work with him till 7 to 3 p.m. And then they'd work with me for cash at night. So I would just take a lot of his carpenters and a lot of his plumbers. but I have to admit, like, it was a nightmare to get people to pay attention to me. It's like, that's the hardest part. Like, as you get more experienced and you get more credibility, it gets so much easier. Like, when I say meet me at a building, like, the contractors meet me there now. Like, I can't even imagine someone no-showing me. Like, if I say to a plumber to meet me at a building, or a GC to meet me at a building, and he would never no-show. It would be career suicide. And back then, they'll just never answer your phone. So I think that's the hardest part. And I think a lot of it comes down to, I tell them, all newbies this: fake it till you make it, right? They don't need to know that you're clueless. Don't tell them you're clueless. Tell them that you're a fucking boss, right? Tell them you know exactly what you're doing. Get to the site. I need you here. I need the plumbing done, right? Don't act like you're scared and that you don't know what you're doing. Like, then they're going to run all over you. So I'd say, put on that confidence, and don't let them know it's your first deal. Let them think it's your fifth deal, and that they're getting a chance to get into something, and they're starting to work with you, and there's a lot more coming. You might never buy another building in your life, but make them think you're going to buy 20 in the next year.
Weiler?
Yeah, so I noticed that you said you had a lot of properties like around the Boston area. So this is kind of like a weird question, but like, regardless on how you feel about like climate change and like rising sea levels, Seaport, for the past couple of years has been like flooding a little more than, I guess, recent. So does that like change any of the decisions that you make when it comes to expanding your, enterprise more in Boston? Are you looking, more north, or do you not consider that at all? You don't think it's an issue?
So I don't personally think it's an issue. The only thing you need to consider with that is if it is in or near a flood zone. And a lot of that has to do with how it's going to impact your whether you're going to get flood insurance. The flood maps can change, right? They just did like a year ago, 2 years ago. And so like, if FEMA changes the flood maps and your building's near the flood zone, something you might have to think about, like, if your building goes in and out of a flood zone, it won't change you, because you'll most likely get the opportunity to be grandfathered into it. But if you go to sell your building, the buyer would have to buy flood insurance. It's going to cost like $5 or $10 grand a year, most likely, for the flood insurance. That's a huge line item. So being near flood zones is something you need to consider. And then if you're buying a building, obviously you want to make sure most likely your lender will catch it. It's in a flood zone. They'll make you get flood insurance. Something you need to put in your budget. From a development side, there's a ton that goes into being in a flood zone. It's actually there right now. I have a project in a flood zone. My team is presenting it to the conservation committee because there's so many regulations regarding a flood zone. So we have a 6-unit project tonight going to conservation because we're in a flood zone and we have to go through all these extra steps you would never have to do. So it's just money. You can get through it. You can't put units on the first floor, right? And if you do, they have to be above the flood zone. So a lot of times it's like complicated because you can't do a step to the unit because then it doesn't meet handicap accessibility requirements. So you have to do a ramp at the certain grade to get there, or do a lift. So there's just a lot of stuff that to consider when you're in those areas.
Sounds like a nightmare. You tough?
Oh, I'm sorry, I forgot to lower my hand.
Oh, no problem. Does anyone else want to raise their hand? Because I can keep going forever, but I want to give everyone the opportunity to. Weiler?
Yeah, so I have a question about just starting out. Obviously, times are a little different now. Like you said, when you started, it was kind of at the bottom of the recession, coming back up. Whereas us, future home buyers, we're probably hitting the top, where prices around Boston are at almost all-time high. So as far as when you got accepted at Wellington and you started out, when you looked at a property and you saw that it was going for, 400, 500,000 or so, compared to how much you were making or how much you had in the bank, did that kind of scare you, knowing that you were going to go into a deal that's so big that, like, were you ever scared that maybe you might default or you couldn't rent out, or that you were going to get stuck with, you know, $500,000 in the hole or something like that?
Yeah, I mean, like if you to be like about that first deal, by the time I finished construction, I had like on that first rental, I think I had like 60 grand on my credit card. Right. I mean, it's you know, there's definitely risks. You're definitely, you know, you're taking, you know, your calculated risks. That's what this business is all about. I mean, you're going to take risks. You're going to make sure, you know, I was confident that I knew the numbers, and I felt that when I got the building rented that next September and I started getting, my mortgage was only going to be like $5 grand and the rents were going to be like 10 grand. Well, and like expenses. So I was going to make 5,000 a month. And I was like, well, even 60 grand, I was like, I'll start paying that off pretty quickly at 5,000 a month. And so it's all about calculated, you know, decisions. Same thing on that first condo project. I think I was like 80 grand on credit cards. And it was like, you know, I knew I could sell them and I knew I could get out of it. So it's all about analyzing the deal, right? Understanding the market, making sure that you're getting into a good transaction. It's all in the buy. Real estate's all about the buy, right? You can be great at construction. You can be great at renovation, management. Like it always comes back to the purchase. Like if you buy a property at the right price, I mean, that's the name of the game.
We've got 2 questions from the chat here. First one is, do you recommend developing properties while still an undergrad?
I mean, developing is an interesting word, right? So, I mean, when I use the word developing, I think of that as like entitlements and ground up construction. I would say I always think you should walk before you run, right? Like, I think there's like we just talked about, risk. There's huge risks and losses that can occur when you're going through entitlements and zoning and all that. You're putting in a ton of money and you might get denied. You might not get approved. You might lose it. Like all that money you put in, all that time just goes away. So, I mean, in that world, I'd say you want to work your way up to that. In regards to doing like renovating a condo and selling it, 100%. I mean, or doing flipping a house. I think all of those are great options, you know, even while you're in school.
So last time I saw you, which was a little over a year ago, you were working on, you were still trying to get the Boylston property approved. And question here is asking you to talk about the Sky and Everett. So can you just do a deep dive on both of those, Boylston and the Sky?
Yeah. So yeah, I'll do the 600 first. So 600 must be the other one. That's the 85 units on Broadway and Everett.
Broadway. I'm sorry.
Oh yeah. So we got that entitled right before COVID. We've been going through the process of getting that approved. And now we got it approved. We're working on hiring our contractor and we're working to get started on it. I can pull up if you guys want to just see this. Let me just grab this right now. So this is Sky. So this is Sky Everett. This is 366 units located down in the Commercial Triangle near the casino. You can see it's less than a mile from Boston. It will be the tallest residential building north of Boston. And it will be the tallest residential building in Everett. Obviously the casino is taller, 20, you know, we're about 250 feet. They're like 280. But it kind of runs you. This is a presentation that we put together that we submitted to the zoning board. So this is the rendering of the project, information, the zoning code. This is where it's located. There's actually going to be a restaurant on the roof. Nick Verano and the Verano Group are going to be the tenant. This is the entrance into their restaurant. Pool with this is a rendering of what the pool will look like overlooking the city. First floor, kind of first floor, how it's laid out. Rooftop restaurant on the 21st floor. Nick Verano and his son are going to be running it. This is it's a retractable roof on the 21st floor, kind of looking out over the city. As you can see, it actually only has 2 variances, height and FAR. So we're feeling very good about it.
Awesome. I've got, try and keep track of who raised their hand when. I think Will Siegel was next.
Yeah. So, sorry, I know we were just going into Sky right now, but just going back again, I guess your earlier days with your properties on Mission Hill. Did you live in your first reno? And if you didn't or did, can you tell us about your thoughts on the idea of house hacking, living in your investment property, and how long did you then wait after the first renovation was complete before you moved on to your next? How did saving up for that next property look like?
So yeah, so I did FHA owner occupant. So that was my primary residence. At the time I was dating my current wife. So she lived down in the greenhouse near the Prudential Center. So let's just say her house was a lot nicer than mine at the time. You know, so from my standpoint, you know, while my construction site was going, I spent a lot of time at her place. And then I ended up buying my second FHA. Back then you had to wait a year. It was another year later, you could get your second FHA loan. So I bought my first building in December of 2010. And I bought my second building in May of, you know, so it was like a year and a half later.
From the chat, we have, where do you recommend finding distressed, undervalued properties?
So, I mean, I don't think there's anything that's like, there's no real specific area. I think every neighborhood, right? You can do drive for dollars. You can go up and down streets and you can see dilapidated multifamilies, you know, buildings that are in rough shape. You can always take the time. And this is what my brokerage does. Like we find a lot, like we'll drive for dollars. The team will go up and down streets, find really rundown buildings, figure out who owns it and call the family, figure out what's going on with it. Why is this house sitting there falling apart? So specific areas, I mean, everywhere. You know, I think you can find opportunities. You know, right now we're buying a lot in East Boston, Everett, Chelsea, Dorchester are kind of our core markets, right? Dorchester is where we're buying most of our buildings right now. I think we've bought 5 buildings in this year in Dorchester.
Trevor?
Yeah, so going back to the Sky Everett development, how accessible is it by public transportation to the financial district, let's say?
So the couple interesting parts. So you can get on about a quarter mile away is a commuter rail that will take you to North Station. The other cool part about this project is, this is the main big, like this is the huge feature of it, is that so if you look right here on 2nd Street, we actually gave the city 15 feet of our property line, of our property. We've already negotiated with the city that there'll be a Silver Line stop at our front door. So the reason that this building is such an impact to Boston and to everything is the fact that the Silver Line currently goes from the seaport and then it stops twice in Chelsea and then that's it, right? The next stop will be hopefully at my door. So you'll be able to walk out of my building, literally come down the elevator, work in the seaport in one of the new labs, and you can literally walk directly onto the Silver Line and you'll go shooting right into the Seaport. So you'll be like, what, 3 stops from Seaport? And our goal is that if we look at the rents in the Seaport, we're building the same product. We might argue even going to be nicer because we're going to have rooftop restaurant with an amazing restaurateur, and we're going to be looking at the city, right? So we actually have awesome views in the Seaport. I don't know if you guys have been in those buildings. You're just looking at shit all around you. It's not cool, right? So we'll actually have amazing views from our units, looking back at the city or out into the distance in Everett. And we can rent ours for $400 or whatever, $500 less than you'd pay down in the Seaport. We're still renting our 2 beds for $3,600 to $4,000, right? And I think that, by the time this opens in 4 years, probably even higher. So that's what really gets this project, makes people even more excited about it.
Question from the chat that I'm sure everyone's wondering, everyone who's not graduating is wondering, will any of your businesses offer co-op opportunities or internships in the future?
Yeah, so we typically do, we do 2 summer interns. So if anybody's interested, you guys can always reach out to me. If you want to write down my email, it's ricky@volnaycapital.com, RICKY. At volnaycapital.com. We hire 2 summer interns every summer, unpaid, but you get to learn the ropes, kind of all aspects of what we're doing. We just are looking for people who are dedicated, who really want to dive in and really take the reins. Our last intern was Dan, and we ended up hiring him full time after last summer. So he currently works for us. So it's a tryout.
Question from Will.
Oh, sorry, that was an old hand.
Trevor just put his hand down too. So Weiler.
Yeah, so I have a question about your condo developments or projects. So when you're building, say you buy a building and you renovate it, or you build it from the bottom up, kind of like what you're doing with Sky. Are you then selling like the entire building, or are you selling individual condos to people who are buying the condo, or are you just renting out as everything as if everyone is a tenant? Like how does that work?
So yeah, our model up until recently had always been buy to rent and then build to sell, right? And the reason for that was just construction costs were so high, right? And then this has kind of been in the recent model. So obviously before we would buy existing buildings, we'd renovate them as condos, and then we would sell the condos. Individual condos. The past couple years, we don't do that anymore. It's if we buy a multifamily, we do a renovation and we make it a rental. If we're doing a ground up construction project, it had always been for sale. And that is until recently. And then now with our 85 in Everett, with Sky, we've got the one in Worcester, the 300, and then a 50 unit in Dorchester, a 30 unit in Dorchester. The plan will be, those will be rentals. So those will be buildings that we build, we rent, we refinance, and either hold forever long-term, or we sell them after 36 to 48 months, maybe 5 to 7 years, depending on the building.
Ricky, have you ever thought about doing any developments in places that are a little more development friendly than Boston Metro?
Like Everett?
Everett, or I'm talking further away. Besides, have you thought about going somewhere else or putting money up somewhere else and partnering with someone?
No. We did buy a bunch of rentals in Providence a few years ago. We just saw an opportunity down there to where we felt we could get great returns, and we bought 6 buildings in Federal Hill. We ended up holding them for about 2 years, and then we sold all of them for a big profit. But that was close by. So investing other places where I'm not directly linked to it, no. I think Boston's a nightmare when it comes to entitlements and zoning. I think, getting out of Boston and into the surrounding towns, like Everett or Lynn or, Chelsea. Even Chelsea's tough too, but like, I think there is something to be said about a quicker zoning process, whereas Boston's 12 to 24 months to get something entitled.
Weiler, is that an old hand or a new hand?
Sorry, old hand.
Anyone else? Floor is open. All right, well then I'll jump again. And I'll say, if you could give one thing, if you could go back to 2010 and give your former self one piece of advice, what would it be? Just one.
One piece of advice. I guess one thing that I didn't do early enough on was like, honestly, what you guys are doing right now. Like, I didn't jump into like networking or like meeting people or bigger pockets or like, my career has had a great trajectory, but I think if I had done a better job about networking, finding mentors, like doing stuff in the real estate world, like I was doing real estate while at Wellington, but it was very siloed. Like I was literally on my computer, like wasn't going to networking events. I wasn't like meeting agents. Like I was literally looking at like built deals on Zillow and analyzing them in my Excel file I'd made. Like, I think if I had put myself out there more, which is my, obviously now we're out there. Like I'm out there everywhere. Like we're always out at networking events and, phone calls and craziness. But I think put yourself out there, right? If people don't know that you're trying to get into this business and you're sitting back, they're never going to know, right? No one's going to come out and actively find you and say, oh, hey, I heard you wanted to buy a multi. You got to let people know, scream it out there, go to events. So I think, putting yourself out there and letting people know that you're trying to do this is key. This is the project I presented tonight. So I, thought maybe I could just pull it up, but 22 High Street in Dorchester. This is actually interesting because it will show you quickly the entitlement process, right? So we originally started with 27 units and 27 parking spots. Now we're at 15 units. They were rentals. Now they're condos. They were 1 beds and 2 beds, and now they're all 2 beds and 3 beds. This is the big site right here. So dot block. So if you guys know dot block, right? You guys have probably heard of dot block, right? It's like 600 units that's going up in Dorchester. This is dot block over here. This up above my screen, where you can see the big building to the top left. That's all been demolished, and that's all going to be a huge development now. So on this screen, you can see these huge buildings to the left. That's the whole dot block development. And my site's right up here with the green trees around it. So I looked at this site and it's not in an area that's that great yet, but dot block's under construction, fully approved and being built. What did I say? Chase the big guys, right? And this is an example of me chasing a big guy. Like Samuels is a bigger developer than me, and they're doing dot block. And I got a site that's a big site right nearby. And so, you can see these huge buildings. Those are going to be monster condos and rental buildings, retail, restaurant, all this great stuff. I'm right here up on the hill, following along. So this is the street, it's kind of just a standard street. This is my site. So it's this little house, and I want to put my building on this site. This is already built. This is my rear abutter. So this is directly next to dot block. This is 36 unit building that's already been built in my backyard. This one's approved across the street from me. Originally, my building was a lot bigger. Now I'm much smaller, more greenery around it. A lot of this is a game, right? I didn't know I'd end up at 15. I thought I could get it to 18. I knew I wouldn't get 27, but I started with 27 with the intent that I knew I'd have to cut and wanted to see where I'd end up and concede. So This was the original parking garage. Now it's down to this parking garage. You know, cool, very cool units. We did a huge roof deck up top, which will be really fun. These are just some of our previous projects that the neighborhood wanted to see of like what the, you know, what it looks like. These are some condos that we've built over the past year. This is the original design, which I fucking loved. Architect killed it. I thought it was such a cool design, so modern. Neighborhood told me to fuck off. They're like, you're never building that. Now it looks like this. You know, one thing we did, which is a little trick, like we changed the front facade, right, to make it look very, you know, more traditional. But what they don't see is that we kept all this cool characteristics on the side. And so there are still some really cool roof lines and stuff going on the side of this building that will make it very unique. You can see kind of like on this side here. And the coolest part about it, we're calling it the crown on high. So when you're coming into Dot Block right here, this main road from Boston, you'll come up this main road and you'll see us up on the hill, and it's going to look like a crown. So we're calling it the crown on high.
I'm jealous. Ricky, I know you're probably going to have to hop off soon. I think we have 2 more questions if you got the time.
Yeah, what's up? Perfect.
Weiler?
Yeah, so to the best of your, like, you know, ability, what would you say is like a fairly decent number of capital that, you know, somebody just graduating from undergrad should have either saved up or is able to invest in order to get started in, like, you know, rental properties or multifamilies, things like that?
So, I mean, there's 2 ways to look at it, right? You can go the route I went, which was like save up enough money to get your actual first FHA loan, right? And so you look at it from the perspective, if I just do some quick math, we've got, you know, a typical multifamily in, say, Dorchester, you could maybe get one for $900,000, right? $900,000 for a 3-family. You know, you're going to need to put down 3.5%. So that's $31,500 is your down payment. And they're typically going to make you have at least 6 months of mortgage payments in your bank account. And so, you know, a mortgage payment on that building will probably be around, I don't know, $3,000 a month, $4,000 a month, maybe higher because you're only putting down 3.5%. So say 4,000 or 5,000. So say 4,000 times 6 is 24,000. So $50,000 to $60,000 to get your first asset. You know, the nice part about getting an FHA loan is they let you use up to like 80 or 85% of the rental on the other 2 units, right, to qualify for the loan. So that you can use that to cover the mortgage. And I think that's where people don't really get it. And that's where a good lender can help you. Like, you're like, how can I afford a $900,000 property? I'll never get that loan. And it's like, well, what if the 2 units in the building are renting for $5,000 a piece, right? You're $5,000, your unit, you're living for free. Your mortgage is only 5 or 6. You're cash flowing like $2,000 a month. So, you know, it's really asset by asset when you look at a loan. So any FHA lender who like just says flat out what you can afford, like there's a lot more to it than that. So just be aware.
Appreciate it.
They scaled it back to 75%, which sucks, but still 75%.
Yeah.
Archit hasn't asked a question yet. So Archit.
Yeah. What would you say is the biggest like risk to this industry in the like next 10 to 15 years?
Rent control. I mean, I think that the biggest fear for any landlord is everything happening right now with gentrification, rent control, you know, all of that affordable housing, from a development standpoint, how many units have to be affordable? Right now it's 13% minimum. Like there's talks they want to, if it depends on who becomes mayor. It's again, this mayoral race for your guys' real estate careers in Boston is insane. Like it's crazy. And depending on who wins could change everything. Some of them want rent control. Some of them want more and more affordable units. So like a project like this, this is what they don't get. If you told me I needed to build this building at 25% affordable, it doesn't get built. It just does. The numbers won't work. So by making me do 15 units and 2 affordable, we could do that. If you make me go to 25% affordable, this project doesn't happen. So you'd see a halt in development. And then rent control is obviously would be the biggest fear, right? If you can't raise rent, or you can only raise it by a small amount. And then, what that does is that all these buildings that have like tenants in them that you would right now, I acquire buildings that have tenants that are paying like $500 or $700 per unit, right? And you go through the process of getting those rents to be raised. If they use rent control and that unit can only go up 2% a year or 3% a year, unless that person moves out, right? That 700 goes, the building's value just plummets. So I think it's that's the biggest concern right now for everybody.
Ricky, do you have time for one more question?
Yeah.
Will?
Yeah, so basically just a bit of context about myself. I'm actually graduating in about a month, and I'm relocating to the DC area and starting my full-time job at a REIT as a financial analyst in July. And so my goal is to have my first investment property, just like you did, within hopefully 6 months of my start date. And I know things are different, and I was asking you about the, your renovation work and whatnot earlier, but for someone like myself, going to a whole new market where I don't know nearly as many people as I do in Boston, and wanting to get into investment properties, what would you recommend something a lot more conservative than what you did? Not nearly as much renovation work, newer construction, but there's less risk of hot water tanks failing or other large items like that.
Yeah, I mean, buying Class A buildings is obviously awesome. It's great when you acquire an asset that's just brand new and there's no work that needs to be done. It's just your returns are going to be so much smaller. And it's, I think when you're getting started, you have to take some sweat equity in these things to get to where you're going to want to be. So I would say, don't get into a full gut. I always tell this story. Just don't get into a full gut renovation. It's like that will bury you on your first deal. You want to do a cosmetic renovation. You want to buy a building that's been the same way since the 70s. It's got old kitchens, old bathrooms. It's really dirty. Dirty's awesome, right? If you can buy a building that's it's actually not that bad, but the tenants are just gross. Like that is a very easy thing to do. You clean it up, you repaint, you sand the floors, once you turn it over, it could immediately increase the value by a couple $100,000 just because it's so gross. And so don't get into a full gut renovation, but get into a building that just needs a little love.
Got it. Thank you. And I guess just one final thought then before we close out the meeting. This is kind of a question just for everybody here in the audience, but what would you say some of the key personality traits are, or the key, mindsets for true success in this industry?
I mean, I think you need to be, definitely need to be outgoing, right? I mean, this is a business that's a people business, right? Like you have to be putting yourself out there. You have to be meeting with people. You have to be going to networking events. You have to be able to negotiate. It's not going to, sitting back and trying to hope that a real estate agent does it for you. It's going to be a slow grind. You've got to be able to put yourself out there and make that stuff happen on your own. So I think having that confidence, being able to put yourself out there, and, you know, getting the exposure is key.
Ricky, I want to thank you for your time tonight. I know you're really busy, both your job and you're a round 2 father that just happened. So congratulations on that again. Give your son and daughter all our love. And again, I just really want to thank you for all your time tonight. It was great. This was so informative for everyone. So we would clap if you were in person, but on Zoom it just sounds so sad.
Yeah, and guys, you know, stay in touch with your group. If you guys want to schedule something, you know, where you meet up at one of the construction sites, you guys all schedule it. You know, I think I've done that with other colleges. Suffolk Real Estate Club had like 10 people who tagged along. We checked out some construction sites. So if you guys want to organize that, you can reach out to me and my team, and we can definitely schedule an hour or two where you guys can meet us out at some of the construction sites and kind of see what we're working on.
That'd be wonderful. I think we definitely need to get that going. COVID turned everything upside down. That'd be great.
Yeah, maybe in May or June before summer.
Yeah, that sounds great. All right, everyone in the chat's thanking you, and again, thank you so much, Ricky. I'll email you the recording next couple days once it's all finished. So, thanks so much again.
Awesome, guys. Have a good one.
You too. Thanks so much. Bye bye.
Thank you, Ricky. Have a good one. Bye bye.